Hello investors, it's Zil from Equitymaster bringing you investing insights to make investing simple and easy to learn. To stay updated on investing trends and the latest developments on Indian markets, don't forget to subscribe to this channel and like this video. 8 months ago, I recorded a video on high growth penny stocks with zero debt. The video received wonderful response with over 150,000 views, and I want to thank all my viewers for showing support. On the back of multiple requests for another video on penny stocks, I am back again to discuss the high potential penny stocks that could score big in 2025. As we look toward 2025, many investors are excited about finding the next big winners in the market. However, with markets touching record highs every other day, the odds of finding the right investment opportunities get slimmer by the day. The world is changing fast with new technologies and trends creating opportunities for companies to grow. If you choose the right ones, a small investment could turn into a big profit. Enter penny stocks. Penny stocks are small companies that often have a lot of growth potential. Investing in penny stocks can be a way to make big gains with small investments. However, finding these stocks takes careful research and a good understanding of the market. They are also very risky, making this a strategy for those willing to take a chance. So without further ado, let's look at some penny stocks that have the potential to grow in 2025. Before we move on, please note this video is for information purposes only. It is not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. First on this list is Suzlon, one of the leading global renewable energy solutions providers. The company offers a full gamut of wind project planning and execution services, including wind resource assessment, infrastructure and power evacuation, technical planning, and execution of wind power projects. It has installed over 20 gigawatt of wind energy in 17 countries and over 111 wind farms with a capacity of 13,880 megawatt. Suzlon was once the darling among new renewable energy companies, but despite being among the world's top wind turbine makers, today it is bogged down under mountains of debt and uncertainties. Added to that, slowdown in demand amid the overall global economic crisis had made matters worse. There were reports of poor blade quality, low order fulfillment, top management departures, and strategy gone awry. However, the stock has seen a complete turnaround. The company has transformed from laggard to a leader, delivering multi-bagger returns of over 200% in the past year alone. 2024 has continued this upward trajectory with the stock surging over 90% so far. The company recently announced its results for the June 2024 quarter. It reported a 50% year-on-year growth in revenue and 200% year-on-year jump in net profit due to record highs wind turbine deliveries. The company reported its largest ever order book of 3.8 gigawatts since its inception 29 years ago. Suzlon Energy has outlined several growth strategies and targets for FY25 to capitalize on the sector's favorable conditions and strengthen its market position. The company plans to expand its operations to meet the growing demand for wind power. This expansion includes exploring new markets and increasing its footprints in existing ones. It is also focusing on enhancing profitability in its WTG business. By improving operational efficiency and cost management, the company aims to achieve better financial performance. It plans to focus on hybrid projects that combine wind energy with other renewable sources and storage solutions. This approach aims to optimize energy generation and provide reliable power supply. The second stock on this list is Bajaj Hindustan Sugar. This company is the largest sugar and ethanol producer in India. With 14 sugar mills and 6 distilleries in Uttar Pradesh, the company is also a leader in byproducts such as molasses, bagasse, fly ash, and press mud. More than 500,000 farmers supply sugarcane to the company, which has a crushing capacity of 136,000 tons per day and an alcohol distillation capacity of 800 KLPD. Why should the company be on your radar for 2025? Bajaj Hindustan Sugar has recently partnered with EverEnviro, a leading compressed biogas (CBG) sector player, to establish cutting-edge biogas plants in Uttar Pradesh. This capitalizes on the company's massive production capacity of 500,000 metric tons of press mud annually from 14 operational sugar mills. The biomass will now be transformed into clean, renewable energy. The company is on track to become Asia's largest crushing capacity owner and a global leader in the industry. The company has two options in this partnership: sell press mud at predetermined long-term prices or become an equity partner in the CBG plant project. The company plans a strategic approach to realize partial value for press mud through cash and equity in the CBG project. Additionally, the government's proactive approach in meeting ethanol blending targets signifies a favorable regulatory environment, fostering confidence and investment in the ethanol sector. Therefore, this development bodes well for all sugar companies, paving the way for further expansion and success in the ethanol market. As the Modi 3.0 government is expected to sustain its efforts in promoting ethanol blending, the ethanol blending business is poised to gain momentum in the medium to long term. The company is also changing its stance and recouping its investments from group companies to reduce overall debt. In FY24, its total borrowing reduced 7% from last year, Rs 35.5 billion. In the past 5 years, the stock price has gone up by over 400%. Third on this list is Sarla Performance Fibers. The company manufactures various types of polyester and nylon yarns. It has a nylon and polyester product range of over 250 varieties of value-added yarns and threads. The stock has risen over 50% in the last 6 months. One reason that could be attributed to the recent run-up could be the company's promoters buying stake from the open market. In the March 2024 quarter, Hindustan Cotton, the promoter group, increased its stake in the company through 4 open market operation trades, acquiring 85,431 shares. This move raised Hindustan Cotton's ownership from 56.5% in February 2024 to 56.6% as of March 2024. Going forward, the company plans to expand its business, indicating a proactive approach to capitalizing on new opportunities and ensuring future growth. It also stands to benefit from the PLI, Production Linked Incentive Scheme, announced by the government for the textile sector. The Union government's PLI scheme for textiles will enable the apparel industry to boost production and promote their branding. The scheme will also enable linking of the textile value chain in lieu of FDI in the country. Fourth on this list is Bodel Investments. The company, along with its subsidiaries, is engaged in the business of industrial packaging, greases and lubricants, leather chemicals, etc. It is a government-owned enterprise and does not have any business of itself. The President of India holds 60% of the total equity of the company, and it is under the administrative control of the Ministry of Petroleum and Natural Gas, Government of India. Balmer Lowry and Company has a joint venture with Visakhapatnam Port Logistics Park Limited, which operates a dynamic multimodal logistics hub (MMLH) in Visakhapatnam. The MMLH caters to both bonded and non-bonded cargo and offers value-added services such as customs clearance, sorting, grading, aggregation, disaggregation, and freight handling. The CFS, Container Freight Station business segment, which commenced operations in 2023, has emerged as a pivotal component of the JVC's portfolio. During the financial year 2024, the CFS handled an impressive 7,580 20-foot equivalent units (TEUs) of export cargo and 6,099 TEUs of import cargo. The outlook for the current financial year is also promising, with the addition of new customers in the CFS operations. The CFS segment handled 3,402 TEUs of export cargo and 2,656 TEUs of import cargo during the first quarter of the financial year 2025. The rail siding business also showed significant improvement by handling 22 rakes during the quarter. In the past 5 years, shares of the company have gained over 100%. Last on this list is Bodel Chemicals. The company is India's leading integrated dye stuff company and the largest domestic manufacturer of dye intermediaries. It has a market share of 20% in the domestic dye intermediaries market and 13% in the dye stuff market. Its global market share is 6% and 3% respectively in the dye intermediaries and dye stuffs market. The company has state-of-the-art research and development laboratories that it uses to develop new products and processes. Recently, it has also added benzene derivatives to its product portfolio. The stock has been languishing in the same range for the last few months due to a slowdown in demand in the global market. Uncertainty of the European market has further decelerated the demand scenario of the chemical industry. However, the management expects the overall demand scenario to improve after a couple of quarters when the factors disturbing global trade are back to normal. Meanwhile, it is working towards utilizing capacities optimally to improve margins. It is also adapting to market changes and focusing on efficiency and cost reduction. The management is focusing on reducing debt levels over the next few years. Efficient working capital management has led to improved debtor days. It expects to maintain similar debtor days going forward. With the new greenfield project expected to commence production, the company also stands to benefit from higher production, which could improve sales and profit growth. So there you are. These were just some of the penny stocks that have good plans for the future. Each of these penny stocks comes from different industries offering various paths to success. However, it's important to remember that investing in penny stocks carries risk. While the potential for multi-bagger returns is exciting, investors should approach these opportunities with caution. Diversification and a well-considered exit strategy are essential to managing the inherent risk associated with the penny stocks. With caution and a clear plan, investors can maximize their chances of success while protecting themselves from significant losses. That's it for today. Don't forget to like this video and share it with your friends and family. Have a profitable day and happy investing.